Thursday, October 12th, market analysis. Stan Ehrlich, good morning. Almost 10 o'clock California time, about the middle of the trading day. I start out with stock market indexes, typically taking you to the futures markets and sometimes into sectors, indexes of other kinds, and some other features like cyclicality and specific chart formations. So I'm going to start out with the E-mini December futures contract, which has had a great rally along with the other indexes since Friday's bullish engulfing ER buy signal. And this is an automated trading system that's been developed over about a 10-year plus period. It intends to pick tops and bottoms. We did get the top of the market on July 27th. And in many indexes, including the liquid futures contract back on October 13th, we got the bottom. This appears to have been, and I said so on Friday of last week, the October lows, which I've been waiting for, had been waiting for. I think it's in force, and we're not going to come down below Friday's lows last Friday. Frankly, I hope we don't come close. And any downside correction should be in the ballpark of 4,340, 350, 360, and then higher. Maybe a 50%, but nothing major, nothing violent. And I'm liking what I'm seeing. I think we're going to have periodic new highs over the next few months. And I'll start talking about the Santa Claus rally, which made $7,317, I think, 2 years ago. Last year, a small amount, and has a great track record. And we have exact buy and sell times and dates, and that's entry and exit for the Santa Claus rally. I'll teach you about that soon. Now, up we go. Higher high, possible higher close. Right now, it's the spider's only up a couple of ticks, nothing. It's unchanged. We're down very little in the DIA. I'll show you in a minute. And the Qs are doing okay. They're up 1.5 points. Actually doing the best of all three at the moment. So next chart. Oh, and by the way, the next upside objective on this 2 or 3 week rally, maybe a little longer than that, should be at least 4,500 and say 50. Yeah, that's good enough. Right in the ballpark. That's where the previous shoulders were of a now defunct head and shoulder top. We have closed for probably 2 days now above the neckline, which is absolutely a no-no, ruining what I had going very nicely. A head and shoulder top, downside objectives. They didn't reach them completely, about halfway there. And then all of a sudden, the October low kicks in with a bullish engulfing, yay! And that's the big one. So now, periodic highs, minor downside corrections, big ones coming on Christmas and into January, probably higher. Next chart. December. E-mini, 1 minute. Looks fairly firm in the last couple of hours after a typical minor correction. Remember, it didn't come down very much. A little bit lower in the middle of yesterday's range. And it's popped back up pretty good so far. Only the half a day is left. So what about the spider? It should look very similar. A little bit different trading hours, of course. And it's very slightly lower on the day, half a point at the moment. Bouncing at the moment off of the previous neckline. And of course, that's not a head and shoulder top anymore. Now we got the top of the market. That's great, July 27th. And you can see on the spider that we also have had a bullish signal on the bottom of the market, October 13th of 22. So far we've got the bottom, the top, and the bottom, but it's only been a few days. Let's see what happens next. The QQQs are doing awfully well. They're actually coming up to a bear trend line across the high since July 27th rally high. This previous head and shoulder top never broke out to the downside in the first place. It looked like it was about to, approximately October 5th, and all of a sudden, boom, you have a bullish engulfing, and you have had, that's last Friday, a rally every single day since, including today's very nice extension. Right now, it's not very much higher on the day, and it does deserve a little bit of a break. So I'm not going to be surprised if we do close a little bit lower today in the various indexes. I think we'll come back tomorrow, maybe stronger if we close a little lower. NASDAQ looking pretty good. It's the same thing basically as the QQQs. It's the E-mini relative to the spider. Next, the DIA can't seem to make higher highs. Having a little trouble here. Not too much of a deal. Right now, a doji inside trading range and a little bit lower, not very much at all, not even a full point, 0.90 basically. Don't have too much to say here. Had a great bullish engulfing almost at the low of the whole move. We had sell signals during the top of the formation. We've had some great buy signals in the DIA. Unfortunately, not quite October 13th, but so close to oversold. All right, so next, the Russell 2000 is my last one. We did have a great bullish engulfing buy signal last Friday with the Russell in approximately a very wide, historically profound area support that we have bounced off of once, twice, 3 times, 4 times, 5 times, 6 times, and now maybe, wow, 7 times over the last year and a half, approximately, closer to 2 years maybe. So huge on a very long-term basis. Check this out. A high, but a slightly lower high, and again a slightly lower high produces a bear trend line, slightly lower sloping. Across the bottoms, you have a variation on what could end up being the final trend line. You just lower it a little bit like this, and you end up with a gigantic pennant, almost a parallel, big, huge sideways trading range. Interesting, isn't it? Let's go to the October lows. I've shown you this chart prior to last Friday's reversal many times for weeks. I even went to the extent of trying to pinpoint when I thought the market was going to turn up. This is my date. I had chosen July 16th, I believe, October 16th. And I had chosen about 407, 406 area. So I only came down to 420 and it turned back up on October 6th. So I was too late and too low. But I'm pretty convinced at this point, because it's broken through all the necklines, just not supposed to happen. That downside corrections in general are going to be met with support, and we're going to start to see higher highs. There is a little bit of a gap to finish closing. So don't forget that. And that was as it gapped down below the initial breakaway gap to the neckline on 921, starting the move down, but it didn't go as far as I expected. Next, we're looking at the MES real quick. As you would expect, it's exactly the same as the E-mini. So I don't really see anything terribly wrong here. A little bit of a dip on a 1-minute chart momentarily, no big deal. And finally, futures. Okay, so there's the E-mini again, a little different perspective. NASDAQ, a little bit different perspective. And finally, we get to the bonds. I am showing you the ER3 Ehrlich reversal signal, which was the red bearish engulfing on April 12th of 23. And the ER3 position trade turned on, which got short right there. Now we have a standard, I believe, trailing stop. That's correct, being used. That's the yellow line just above the reversal day's highs. And for the first couple of weeks, and this is meant to move slowly on a daily data chart, we did not move our stop. We did not get stopped out. We only had a loss at one particular point for about a day, day and a half, right there, which was, I would have been concerned. But it started to work fantastically very shortly after that, and we rode the trade all the way down until this could be profound. A couple of days ago, we got stopped out with a huge profit. The system did not get a buy signal. We're just out of the previous trade. Notice that our trailing stop tightens very quickly because of a variety of circumstances. It is not your standard percentage or an amount. It is a combination of factors. So the low that we had a few days ago in very oversold conditions might be a profound turning point. I can't come to that conclusion quite yet, except I'm just showing you our ER3 position trade with standard inputs and how it acted. So the bounce I'm expecting is not happening today. I'm looking for a rally back up to about 117 for the moment, and I'm suspicious that that was more important than I can tell you about the low of the last week's prices. Next chart, 10-year notes, nothing's running here. So oversold conditions, bounce, but we have a bearish engulfing today. This is a test. If we have a bearish engulfing, you're supposed to start coming down some. And if it doesn't, and it starts to make highs higher than today's bearish engulfing high, that means you've got a fairly strong situation on your hands, and I would easily expect to follow through up to 109 and a half-ish. That's the beginning of a little bit of resistance. From that point up, let's see what happens. Now, that's not very far, but I think that's enough to, well, let's see what happens. Now, on the downside with the crude oil, we came down a couple of days ago, yesterday, and we closed the gap. Now, we didn't need to come down anymore. There's no gap to close. It's sinking a little bit more into another support area, the one it bounced off of before for the first time in several weeks. So, is it going to hold again? Don't know. Next chart. Heating oil. Excuse me. Resistance area. Still, we're lingering around this little zone I got. I think it's going to turn back down again. We just simply got oversold to a normal degree and bounced for a few days. Not the kind of upside momentum or follow through that I would expect if I was bullish. So I'm looking for it to turn down. And natural gas had a ER bearish engulfing sell signal yesterday. We screamed bloody murder at the time. Today, with ER3 selling short at the red dots, the market opens above the red dots. So our order is, or better, filled immediately on the opening right there. We do have for a little while a little bit of a loss, but it never hit the yellow protective stop orders, stop loss. We are currently well below the opening at the current quotes. So we have a profit on our new short ER3 scalp and our ER3 new short position trade. The scalp, of course, will get out somewhere between here and the close if it hasn't been bumped out already. I don't know. I don't think so. So let's see what happens with this. It's acting very good, very classic, typical situation. I want to see a new low ASAP, and that would be maybe tomorrow, below yesterday's low. Next chart, gold, our bullish engulfing bottom in the gold market to the exact day was last week. I screamed bloody murder at the time. Every day since then, we have had a higher high and a higher close until today. Today looks like we have our first little correction. It got to my first objective, that little resistance area, this little line right here. I still think it's very okay. The gap may be closed now. We may be going down to close this gap first. That wouldn't do anything to the bigger picture. Got to watch out for that. Otherwise, sometime between the next 2 or 3 weeks, Yeah, I think it'll be up to 1912, 1912-ish. But does it close the gap first and then go up? Next chart. Silver, resistance, stopping the rally, right where I wanted. Bearish engulfing in progress at the moment today. Good chance that that's it. We're going to go right back down to 20.75-ish. And this time, probably break below it. Next chart, platinum. We got a great buy signal last week, Friday of last week. We have a little retracement that is slightly worrisome. Now, I am interested in buying at the green dot, usually 3 days after the signal. So today's touch of the green dot, extension maybe, is okay. But I certainly don't want it to go much lower than that. I don't want it to close much lower than that. And the fail-safe is, of course, the yellow dots. But I have to tell you that the ER1 trade on the day of the signal easily made a little bit of money in the last few days, and probably would be out as of now or this morning, whenever it got below yesterday's lows. Next chart. High-grade copper. Tierra del Fuego, heading south. It's going to make new lows. Sounds like something I just said a few minutes ago. New chart. We have, this is something brand new. First thing I've seen this morning. A bullish engulfing ER buy signal in soybeans. Interesting. I didn't expect it, other than the fact that we did have oversold conditions. But I wasn't expecting a huge bullish engulfing. In one day, today, we have a lower low for the trend down for weeks and weeks, and a new high, and likely a new high close for the last approximate 2 weeks, all in one day. That's pretty significant. Now, we are pushing up into some resistance, but RSI is jumping as you would expect, but nowhere near overbought. I am having to turn bullish in soybeans. I have no way around that. Let's see how it handles this signal. I'm now bullish in soybeans. And look at this, soybean oil is doing the exact same thing. No shocker. I'm bullish in soybean oil. It's I think going to go at least up to the neckline. This could be more profound than that. So I'm looking for the rally back to the neckline at a minimum, and that would be 57.12 in the next week or so. Yep. Meal. Never could get below that darn neckline. I've been saying that in the last few days. It got below, but it wouldn't close below. It never officially had a bearish breakout. It's kind of like the NASDAQ on the indexes. And all of a sudden, boom, it pops up like crazy. Now, that's not what it's supposed to do if you got that big old head and shoulder top. Now, it's kind of, let me close that off so I don't want to share my sound anymore. Okay, so this is starting to ruin the previous bearish pattern that was looking pretty good until today. I think I'm going to have to erase very soon, maybe a few days, 255 and the other markers for this theoretical. All you can say about the neckline now is it's a good support line, and it just proved itself as support a few days ago in oversold conditions. Next chart. Corn, bullish engulfing, not anywhere near oversold, so it's not green, but still, I got a little bit more rally out of this probably than I was originally expecting. Maybe up into this area here, and that would be approximately 505 to 520. Next chart, wheat. Oh, another bullish engulfing. So, and some people might like to say a little double bottom here, but it's not that quite as close as I'd like to see. So, wheat could be starting a rally easily up to 620. Next, cattle. Okay, bullish engulfing yesterday, and that's how important they can be, even though they're not necessarily a signal of mine. Like we got the top there, and we got a bearish top there, and we got a bearish top, and almost there, and that's 5 in a row. Next chart. Hogs support coming back okay. I think it's going to start rallying. Next chart. OJ. Well, my little reverse didn't work, and I said it was extremely rare. It's green tree disease, so I'm still waiting for a signal. I think the next bearish engulfing signal I see in orange juice might be extremely long-term, major, profound. I'll make that call when I see it. Next chart is cocoa. Hey, my little head and shoulder top idea is back again. I only want a little rally another 1, 2, 3, 4, 5, or 6, or 7, or 8 days from now, right in here. And the price should be, I don't know, right in this little area up to the top of this. And then for it to start sliding back down, and I'll start screaming head and shoulder top. So this is so a week or so before the last shoulder could maybe someday form. We'll see how this develops. It's kind of difficult to call these things so far in advance. So give me an extra, time out. Next chart, coffee. Resistance is going to stop this rally very soon, and I'm expected to roll back over again and start making new lows. Sugar, not much of a comment I can make. I don't have anything great to say on sugar at the moment. Cotton the rag dropped off and got oversold now. A mild oversold condition, but that's about all you've been getting before a nice rally starts every time. So every time we're back down here to oversold, we get a rally. Get oversold again, we're very close to the bottom and got a rally after that. And then we got a rally in here, and we got a heck of a good rally out here. Even some of these oversold conditions on the way down bounced a little bit. So why not again? I think the market probably is trying to turn back up, and we'll see if it can push 89. Next chart, E-mini. That's it for today. Oh, I do want to talk to you about sectors for a second. 50%, and I'm going to fly through these, of the sectors have a green low in the last week or two. Just keep your eyeballs on approximately this time frame right there as I begin to roll through these charts. There you go. 1, 2, no, 3, 4, 5, 6, 7, 8. Well, that's a lot. No. 9. Missed about 2, I think, already. That's all. Missed. No. 10. I'm almost at the bottom. That's it. More than half of these sectors that I have been showing you now and then have buy signals. You have a great day.